How we doing, traders? Welcome back to Stock Market Movers. Are you guys ready to get back into the stock market? It looks like we are definitely seeing at least a big pullback here. One thing that we need to keep in mind, of course, what's on the calendar right now? What are we talking about? What's coming up? Well, today, Quad Witch seems like that's definitely playing an effect into the market. Recession concerns. We'll talk about that. Fed talk that is out there right now. And of course, we'll get into headlines. And we got a guest today. Of course, we got Josh Saylor, partner and co-founder of Blue Zone Wealth Advisors. We got a lot on the schedule today. Let's get right towards the action. A lot to talk about. Even one that I was interested in hearing, Maxar Technology announcing to be acquired. We'll talk about Maxar. This is one that I'm learning to get a little bit better. Like always, find themes and stories. Stories are everything. Let's get it started, stock market movers. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. Team, let's get into the action. Let's take a look at the overall market. Let's see where we're at right now. It doesn't look good by any means. I'm going to put this in a bigger kind of chart here for us to take perspective, but definitely big hit down today. Let's talk about it. We're down now towards 381 and continuing to leak, even though we went down big overnight. And I think this is one thing to catch is we are going down and going down fast. Before we were at the 200-day, getting to the 410 earlier in the week. Now we're back down to 380s almost. That is not what you want to be seeing if you are a bull. And another thing, we've been talking about this channel. We went up to the top of the channel. We rejected multiple times. We couldn't hold through this trend line. Now we're cutting back down. Now you got to go. You got to understand where the support is. If you were riding this trend and you didn't take profits all along the top here, well, the main thing is when you go and you cut that support, we got to keep in mind so we don't get caught in the stock like this or in any stock really, because when the market turns like this, it can turn around even the most bullish looking stocks. Of course, we're seeing action like that happening right now. And I think it's an important outlook to watch. Of course, you guys know also how I talk about often the rule of three. You guys know I call this all the time. What I look for a lot of the times is 1, 2, 3 times trying to get up there, trying to break through that 410 level, right? Well, we went up there one last time trying to get up there to 410 and could not hold that breakout. And ever since then, we've been turning quickly through the support. So that's what I'd call out there. You guys can see it. And this is what I look for often. 3 or 4 attempts to get through the resistance. If it can't get through, a lot of times you're going to get that support test. We'll see what happens in the SPY. How far down can we go? And if we do kind of run into a tough beginning of the year, are we going to cut through the 350? Have to wait and see. Of course, I think we could always just kind of stay within this kind of trend. So maybe that puts us closer towards the 350 with another bounce going to 390s. But it doesn't look good for next year. That's what it's all about. Money Mitch, when did you get that haircut? Says Kenneth. Well, like always, when the market takes a cut, I got to take a cut too. So took the profits on the hair, and now we start back to regular, right? A lot of times in this market right now, I've been taking some day trade style, right? And then we want to move on. We want to go ahead and switch over, get towards more of a mentality now that there you see it. We're getting out of the profits. The fourth quarter run might have already happened. You guys see how I called this show. It doesn't look like we're going to get that Santa Claus rally. And right now, we're going down pretty fast. Now, what happened here? Why are we going down, right? Well, let's talk about what's really happening underneath right now. Well, a lot of it is going towards the focus on recession concerns. Of course, we were focused on inflation for a long time. Why? Because the data was telling us to focus on inflation. Inflation was going higher, higher, higher. Finally, we've peaked. We've started to have a trend on the downwards angle. Now, what does that leave room for? Well, what's going to happen with the Fed? If they're going to continue to raise rates and inflation's coming down, well, are they going to break something, right? Is recession coming? Well, of course, one thing that we can keep watch is the jobs number. I think that's the most important number. And that's why there is still talk of this softish landing. I don't think we will have a soft landing, but like always, there's still room for that as long as the jobs stay robust. And you guys hear it from Jerome Powell this week. He still sees them robust. All right. Now, of course, another thing that came into play today was the quad witch, right? Well, quadruple witching really refers to the expiration, right, of stock index futures, stock index options, stock options, and of course, single stock future derivatives. It only happens 4 times a year. What does it usually introduce? A whole lot of volatility. And on a week like this, when we've had no short of catalysts, right? We've gotten tons of catalysts to come out. We had, of course, the beginning of the week focus on CPI. Then that shifted towards the FOMC meeting focus. Now we're moving and shifting that focus over to what? Well, now we get the quad witch and focusing on option volatility. As you guys can see, we're heading down. And I think that added to the sell-off today. Of course, we did get some mentions out there from Goldman Sachs. Goldman Sachs saying that there was 2.6 trillion worth of index options set to expire. They said that this was the highest amount relative to size of the equity market in nearly 2 years. So since the pandemic, there hasn't been this type of expiration coming into play. 2.6 trillion worth of index options. That's going to really shift around the market. Well, there you see it. And it doesn't help when we get more of what? Some Fed talk, of course. Fed coming in here and really shaking things up. So San Francisco Fed Reserve President Mary Daly said today that October and November's reading for the consumer price index amounted to good news. But we don't see anything right now but hope in the inflation data. And I get confidence in evidence, not hope. Also stating we are far away from our price stability goal is what she added. Of course, San Francisco Fed Reserve President Mary Daly coming in with some more hawkish tone, not helping the markets. Of course, we also got some economic data to come in, and it wasn't what was expected. It came in light on the manufacturing PMI. It came in light on services PMI, and it also came in light on the S&P Global Composite PMI. This isn't the worst because it does show that we are getting some slowdown in manufacturing. That's not a bad news, right? Because at the end of the day, bad news is still good news, and that's the way it's playing out right now. But in the long term, we will see this as bad news as we start seeing the economy slow down. So if there's anything that I'm focusing on is looking for signs of 2 things, right? We got to keep looking for signs of the jobs, labor market changing, actually showing us some jobless claims getting the spike, right? And then, of course, we need to also focus on the slowdown in the economy and how fast does the economy slow down? Because we've been seeing the economy hold on and be continuously strong. If that continues to happen, yes, we can still talk about a softish landing. But if we see a quick downturn in the economy because of the effects, the lagging effects, of course, of these interest rate hikes that the Fed is doing, well, that's when we're going to have to really take a look. And also the Fed will take a look, because if the economy comes crashing down, then we could pivot faster. That's what the bulls are hoping on. Now, it's up to you to consider, is that hopium or is that optimism? You find out and give yourself the answer. All right, let's keep going. Let's get into the markets. How we doing out there? It's good to see you guys. Thoughty by nature. What's going on? Seems like the market could bounce after a quad reset to 400 next week, then dump 100%. We've been seeing the moves up in the range and the move right back down in the range. And It was Mark Chaikin that talked about earlier this week. He said that, man, the trend line there on the SPY, holding well there. Well, it held well. Even though we went up there towards the 410, we didn't close up there that day. We closed right back down to 401. We can't close above that trend line. And until then, we're still going to be in this chop. And that's what we need to keep watch. When we break out of this long-term trend line, it's going to be looking great. But for right now, it doesn't seem to be the case. Now, I do want to go ahead and give a shout out. Anyone out there that's just joining the show for the first time, hit the thumbs up. We got a decent amount of you guys joining in right now. Hit the thumbs up. Let's get it going. Let's get some more people in here. And you guys let me know, what questions do you have on the market? How do you feel about recession concern? Do you feel that we're going to go into recession? Put a 1 if you feel that recession is going to happen. Put a 2 if you feel that we already went through a recession. And put a 3 if you're in the camp that this will be a softish landing and won't even see a recession here. All right, what's the next support line on the SPY? Well, the next support line for me is actually a move all the way down towards 364. Of course, you can call this maybe a support right here where you got this kind of action, maybe towards the low of this 373. But really, one thing that I just see immediately kind of happening right now is this gap fill, right? We had this kind of fill right here. This gap is filling. That's where I first could see it slow down, right? That's towards the 380s. From there, are we going to get a bounce back towards 390s? Or are we just going to continue the leak down towards the 365? That'd be the level that I'd really start getting concerned. That's the level that we put in a really nice hard bottom here from October 21st and October 20th. So look for those kind of lows to hold. That's 360, 354 in that area. We'll look for that to hold as support. If you lose that, I think you are coming down here towards the 350s. We have to wait and see. It's going to be a lot on, are we really keeping mentality on that recession concern? And our earnings coming down fast. Look for that. In a little bit, we'll be talking with Josh Saylor, partner and co-founder of Blue Zone Wealth Advisors. Stay tuned for that team. We got a lot of questions we can ask them. And like always, one of the major advantages that you guys have here on Benzinga is that you can ask a question also. What is a recession? Is it good or bad? Well, a recession is not good in the sense for the economy overall and a lot for the middle class, because the middle class is what suffers a lot in the recession. And of course, the lower class even more, right? And one thing that I would say is that sometimes recessions are needed, right, to slow down the economy because the expansion was too fast. This happens all the time. We get waves to the game, and there's always going to be a little bit of pullbacks. Then we'll go into an expansion period. The only question is, how long will it take to get to that next expansion period? Something to keep in mind. All right, let's keep moving. We'll get into some headlines for the day. First up, we're going to talk about Adobe. Let's get towards their earnings. All right, Adobe had decent earnings today. Let's go towards the 15-minute here. You guys can see we went right into the resistance around the 351.20 area, and it definitely held today right close to that area, as you guys can see. EPS Q4, $3.60, beat the $3.50 estimate. Sales at $4.53 billion. And of course, they put out some guidance. Guidance was mainly in line here, but a little bit better than a lot of the estimates. So we're not looking too bad in Adobe in the long run. Now the question is this the type of stock you want to be getting in right now? I think at the end of the day, Adobe is not a bad stock to think about in the long run, just because I don't think Adobe is going away anytime soon. So it doesn't seem like it's a bad area to be in. But right now, I can see that we're really trying to get back above 350. We keep failing to get back above that 350. Even today, we push, and we fail right above that 350. So look to see if we can come back in the end of the day and close towards 350. If we can actually close towards 350, I'll be feeling more confident for us to be pushing towards Tuesday's December 13th high, which was 355.67. So we can actually push into the closing in of this gap. That's a move all the way up there towards 365.61. We can see if we can get up there, if we can get back through the pattern here and above the 350 on that close. All right, that's going to be Adobe. Let's keep going. We'll take a look at the stock that got acquired today. Maxar. Maxar is definitely a stock that I've been looking at for a long time, team. And I think it's an important thing to always be looking for themes, right? I talk about themes all the time. That's why I'm going to talk about Maxar here, as Maxar Technology announced that it would be acquired by Advent International for $6.4 billion. Stockholders to receive $53 a share in cash, a 129% premium to the prior closing price. Now, when we take a look at Maxar, I'll show you guys when I was looking at this stock and why was I looking at it. Well, a lot of the times I like to take a look, especially going into the beginning of the year, that some of these stocks can get the lift, right? We talk about this all the time. But one thing that I always look for, right, is a stock like Maxar. I was looking at this stock back below $10, right? And I was watching this move when we finally got the pop. We got the pop that went up there to 19, and then it dropped immediately right back down towards those $10 level. I felt that that was a good level to think about Maxar just because of the benefits that the contracts. One of the things that you want to think about in understanding the story behind a company is that this was all on government contracts, really. That's where Maxar's main customer is. It's the government, right? And so Maxar went, and I looked into the background of what Maxar does. It does satellite imagery, right? Well, the truth is that the Max contract was given to Maxar. And there was stories out there that towards 2023 and towards 2024, there could be, more competitors given a chance. And that kind of turned me a little bit around, but it also made me realize that there was an opportunity here for Maxar to take advantage before the other competitors could come in and gain some value. As you guys can see, Maxar did do a huge run in the kind of 2020 pandemic time. It got up there to 55, started pulling back. It held for a long time, then finally cut through here with a lot of the kind of the space, virgin space kind of news, and then it recovered. From that point, it's been a decent investment. It's never gone back down towards 10. And I think this is the important thing of trying to always look for themes that can continue growing. And a clear example is that we're moving further and further towards this type of technology, imaging satellite. And there's other companies now, right? There's Planet Labs. Planet Labs getting a little bit of a lift today towards the bell. Of course, I don't think this was really based on Planet Labs. This was more based on sympathy from that move in Maxar. You also got Black Sky. Very similar stocks. They all do the same thing. And I think in the long run, you're seeing that Maxar is the favorite. It's the one that's been around the longest and has the most contracts as we speak. But of course, you got to keep watch on PL and Black Sky to see if they can start taking away some of the contract money that Maxar is receiving. But it looks like Maxar taking an out here and being acquired by Advent International for $6.4 billion. Stockholders to receive $53 a share. Not looking too bad with 129% premium. Not a bad stock there. Maxar on the day. It's not going to do much now. Of course, they got already sold out. But a move from 24 to 51. Not a bad move there. Maxar right back to it. And you guys can see, we're looking at this one in 2020 in about June time. And it wasn't a bad move there in Maxar. All right, getting out of this, catching up with the chat. What's up out there, guys? How we doing, Haven Pick? What middle class? 5,000 a year ago? Yeah, I know. It's tough. It's tough out there. All right, let's get back into the action. Getting out of Maxar's news, we can go towards an upgrade in Meta. Meta continuing the lift. It seems like it doesn't want to go away right now. I am watching the daily. You can see on the daily how we've tried to come through this trend line. I drew this to kind of keep a watch. We've tried to come up here multiple times. I feel if we can't close towards 122, this might already start giving back some of the gain and come back down. It has been stayed strong, but here's the analyst rating. JP Morgan upgrading Meta platforms and raising the price target to 150. So they see a move back up here. And so I think this is a little bit of a reach. I do think that we've closed some of this gap, but can easily reject from this gap and come right back down. So in my eyes, I'm going to be watching to see if we can get back above, of course, the highs to the left, which are going to be December 2nd, 124.04. If we can close above 125, then so be it. It'll be looking bullish to me. But if we can't close above this trend line and towards that 125, I could see us coming right back down through 115 and then cutting through the 110 easily back towards the 100. We'll see what happens there in Meta. All right, catching up out there. What's up, Easy? How we doing, Beach Bum? It's good to see you guys. Boyle is moving. No way. The Widowmaker making moves. Take a look. Ooh, look at that 15 minutes. It did get a little bit of a pop there. Not sure this is news related, but nice little move there. UNG. Boyle. We'll see. How's the SPY here? SPY still hanging out around the 381s. Not many people will probably have given you 381s this week on the SPY. I thought maybe 390 yesterday. Didn't think we'd lose 10 points on the kind of the stock market today. But appreciate the love, Easy. It'll be my birthday on Sunday, but I'll take some early ones. Can't go wrong. All right, let's keep going. Do you know Connecticut is a state? Yes, Kenneth. Yes. All right, let's keep going. Let's get into the next headline. We'll talk about Novavax, as Novavax, of course, gave their offering. And you got to be careful on a stock like this. A lot of times when you're late to the party, that's when you really are going to see investors kind of give up on you. And I feel like that's exactly what happened in NVAX. Of course, Novavax coming out with their COVID vaccine, I think just too late to the game, right? They announced the pricing of a $65 million price offering at $10 a share. Seemed to me like someone might have known this one yesterday. Terms weren't disclosed, but it easily went from 14 back down towards 11.50. Well, it was a little bit off there, off the 10. Wasn't too far off as it's dropped in the last 2 days. We're even to where we are now. We're talking about a 25% drop. So it does not look good there for NVAX. And of course, this company has been really cheap in the past. It's not like it hasn't been cheap before. It was all the way down there to $4, this stock. And at one point, at its peak, towards $320. We'll see what happens with NVAX if it gets back down to 4. All right, getting out of this one, we can talk about some other headlines. But of course, I want to get into what was hot and what was not. We'll get into that in just a second. That's going to be definitely where I love to take a look at and just look at the sectors, the industries, what's moving. Let's get into a restaurant that had earnings, which is going to be Darden Restaurants. Of course, this is a collection. It's a portfolio of restaurants, not just one restaurant. But let's go to DRI and take a look how it's performing in the intraday. You guys can see here on the 15 minutes, we had a huge pullback, and now it's just going sideways. This doesn't mean that it's going down. This doesn't mean it's going up. Right now, it just seems like it's just going sideways right now off the VWAP. And so we'll see if we start to make some recovery or do we break to the downside. But not the worst numbers here. Q2 EPS at $1.52, beat the $1.43 estimate. Sales at $2.49 billion, beat the $2.42 billion estimate. And of course, they gave some guidance for the fiscal year. Did not look bad on the EPS side and not bad here on the total sales. So it doesn't look too bad in the future for Darden. The only thing that I would call to question, of course, we had our analyst on here this week. We had a Wedbush analyst. It's a restaurant expert. And he stated, be careful in the restaurants because, of course, the margins are starting to contract versus, let's say, a grocery store. Well, something to keep in mind. How will the restaurants perform in a recession, or will we just be trying to go more to the grocery store? All can be something to think about as you go into next year and you think about consumer and will they get pressed? Well, I feel like the consumer's already pressed. Now the only question is, do we stop having those outings towards the restaurants? Do you start seeing those get cut off? That's the important thing to keep an eye on. All right, getting out of Darden Restaurants. You guys can see not much movement on that. We'll keep going. Winnebago also coming out with earnings. This WGO. Let's give their earnings, and then we'll move into what was hot and what was not. Winnebago's Industries Q1 adjusted EPS at $2.07, beat the $1.80 estimate. Sales at $952.2 million, beat the $857.31 million estimate. You guys can see here, Winnebago not loved like it was, right? It was making a huge move, broke a long-term trend line. Ever since then, we're starting to use that level actually to kind of reflect on the downside. And you can see I'm going to extend this. You can see how you're just rejecting that action, using that action on this side. And now you got kind of like a downtrend here. We'll look to see if we actually start breaking right back down there towards the 52 and the 50, as this doesn't look good on the chart. And of course, you do got the moving averages all around each other. So just be careful if you start seeing the moving averages move above the price action and you're getting that downward action. Well, we'll see what happens there in Winnebago as they gave their numbers. It was a beat and a beat. Doesn't look too bad there. At least they were able to meet their EPS and their sales. All right, getting out of Winnebago, let's go into what was hot and what was not. We'll go ahead and take a look at the sectors that are making moves right now. If you guys have something that caught your attention today, throw it up in the chat and we'll get through it. All right, we'll take a look here. Jay Rice, what's going on? Is Biden buying oil? Got to let me know, man. I got to take a look at that. All right, we'll keep going. Let's take a look at what was hot and what was not. We'll take a look at the sectors and the industries that are moving today. Of course, it's not going to be looking pretty, team. We've seen the way the market is today, right? Well, consumer defensives are actually the least hit stocks, but still getting hit hard. And where are they seeing the weakness? In a lot of the beverages, wineries, and distilleries getting a big hit down today. Farming products taking another big hit. This is not what we want to be seeing, right? A TSN, big hit on Tyson, continuing on the downside. Even stocks that are some you would consider kind of the value play are not doing well. One that I've been looking at is this Calm. Calm doesn't look too bad here. CALM. You could take a look here on the monthly. It's very, very stair-steppy, but it looks like it wants to get back through 60 and make that move to 62. We'll see what happens there on CALM. Can it get through that trend line and start pushing? This is actually one that I might keep in mind. And we'll see what happens on like a stock like Dole that made a nice little move in November, has gone sideways, but starting to crack through the support. And if it cracks support, will it just come right back down there and kind of fill in this space? We'll see what happens there. Not looking the best there on some farming products. Grocery stores continuing on the downside action. You can see it in the industry also. It's not just one stock. We talked about also, would Pepsi give up that run? Well, there you guys see it. We talked about this earlier in the week. We specifically wrote this on the 14th. So we're talking on Wednesday. So there you guys see that we were looking at this line, right? It was holding the trend line. Now it rejected. Boom. What do we look for? A lot of the times at the top, 1, 2, 3, the fourth attempt. If it can't get through there on the fourth attempt, a lot of times we look for that pullback to support. We're breaking support and now using it as resistance. This looks like it's pulling back, and we'll also maybe pull back Coke, right? Well, there you guys see it. Very similar line that we drew there on the same outlook. Leader, laggard, right? Pepsi led the move there in Coke when their earnings came out before Coke. Now you're seeing Pepsi turn around first and Coke follow. Well, there you see how I can approach the leader laggard trade. So I think that Coke is coming right back down. Where are we getting to? Well, we could do a little bit of a 50% retracement, or it could get all the way back down there. We'll see what happens there in a name like even Coke coming down today. All right, what's going on out there? Coal Steel had some. All right, we'll take a look at that, Shannon. We'll see what was moving there. All right, so what got hit the most? Real estate turning back to the downside. Why did this get hit the most? Not really something that I'm going to dig too much into. Real estate hasn't been doing much. You are seeing a little bit of a quick downturn, so just be careful there. Don't get caught. But the same thing's been going on in utilities, right? We've been making this big move back, and it tends to trend until it doesn't. And it looks like finally the utilities are breaking back to the downside. We'll see if that continues the trend. Energy continuing to pull back. XOM finally showing some little bit of a bottoming around 103, but it's just been on a big pullback since that cutting through the 110. So that's levels to look for, right? Above 110, I'll get bullish. Also, if we can hold the 100 for a little while and go sideways here, then take another trend up, especially if the price of oil can actually come back and not be in the 70s, hopefully back towards the high 80s and 90s. If you're a bull in ExxonMobil, we'll have to wait and find out. One area that I have been keeping a close eye, I just want to watch it for an opportunity. Is a stock like Halliburton, is this going to break right back down, or is it going to give us an opportunity? Just keep watch. We'll see it. It has to get back into the 38s and the 40s. Right now, it's not making that move. Cola is a knockout. All right. We'll see what happens there. Halliburton not looking good. Energy not looking good overall. Consumer cyclical also taking a big beating. Department stores. We talked about this yesterday on At the Close. Now that we saw the bad retail sales, right? We got bad retail sales yesterday. You guys remember that, right? Well, now that we've gotten that, look for maybe potentially some of these retailers that have gotten a nice little uplift with, of course, the outlook of Black Friday, the Cyber Week, and of course, Santa Claus coming to town outlook to start turning around. Stock like Macy's, perfect example, starting to fall off. We'll take a look at a one that I haven't even looked at the chart today. So let's just take a look, like a Best Buy. How's that doing today? Well, there you guys see it. Starting to give up the gains, right? I think this is going to be a trend that you're going to continue to see on some of these. And you can see it. Nike coming back down, right? This was looking good too. This was looking good on the daily. It kept keeping the trend until it broke the trend. Now that we've broken the trend, we really need to find some bounces. If not, we could continue on the leak down. Staples, we need to survive, dude. We faded most retail except TJX. TJX, I understand why you're thinking about that, but even that stock looks like it's trying to go, right? I mean, it has been doing well, hasn't been turned around. But in the long run, I think that if recession is coming, even the discount retailers might suffer, right? Because that's when you just see demand destruction overall. Another thing to note here, you've had 1, 2, 3 tries. You've trying to go up there through the 81. Look to see if you get back up there. If not, could cut down. Ross, stores, very similar. We'll see how these hold on. These are not the worst. Of course, these are more discount retailers, but we'll see how these perform. All right. Jay Rice with some awards. You giving out awards, Jay? You got to let me know, man. All right, Julie, getting rich selling UVXY calls always end up going down. Hey, not the worst. All right, let's take a look. What else is making a move? Let's go to actually something positive, right? Well, let's look at the S&P 500. Let's look at actually what's in the green today. Well, you're going to find that Meta's not looking too bad, even though I do see that rejection from the kind of the above the 122 area. We'll see if that comes back towards that level. Generac bouncing a little bit. NEM looks like a little bit of gold action, getting a little bit of love today. We'll see if that can get the push there through the 46. Under Armour, not looking too bad there. FCX, some copper plays. So let's go to basic materials. What's looking good in basic material? Looks like you got gold, copper, and silver. We've been looking for the silver play, especially, if the dollar is going to come down. But we still got the lift today in PAAS. We'll see if we get back there towards the 1650. Gold not looking too bad overall. Copper getting a little bit of a bounce. SCCO, we'll see if we can catch the dip because this is coming down, but hasn't truly broken. We'll see if it can reverse back through the 60. If it can't do that and it cuts through 59, I would say you got to be careful because you're right back closer towards 58 on the support. All right, let's keep going. MD, what's going on? How we doing? Did not trade anything? Well, sometimes that's a good thing. Sometimes you don't got to push it. That's it. That's truly how it is. All right, in a market like this, you got to be careful, team, when even defensives are washing out. And it seems like everything is washing out today. It's not like one specific area that's doing great. And that's an important outlook because there's not many times where I can go through all my sectors and looks like you get education and training up, some China stocks up today. But other than that, do you guys see much green on the right-hand side? Silver, gold, and copper. But other than that, a lot of red, a lot of industries into the red today. Not looking good for the overall market. And one thing that I talk about always is market breadth, right? The breadth of that. What does that mean? Well, when we get sell-offs or rip up, is it all stocks going down or is it just a few? This matters. It makes importance to focus when you're seeing all stocks going one area. That is not a good outlook. Right now, that's what we're getting. And just to keep that in mind, we talked about this yesterday. FinViz data, we've been watching the SMA 50, and that data, it was above the 60% that were above the SMA 50. Now only 45.8% of stocks are above the SMA 50. And when we think about it, we got up as high as 36% for the SMA 200 data. And now if you think about it, we're only up towards 27.1% of stocks are above the SMA 200. It seems like we're on another downturn. The only question is, when will the bleeding stop? That's the hard question really to answer. And if you also think about it, just be careful. Just as quickly as some stocks can go up, they can come down also, as we're seeing a lot of biotech start slowly but surely turning around. You got to be careful there, team. All right, catching up with the chat. I'll do a little bit of ticker time here before we bring on our guest. If you guys got a ticker to watch or want to take a look, throw it up in the chat and we'll get through it. All right, now I will go ahead and maybe call some of the notable moves today. Of course, we've been seeing a lot of stocks make moves, but some of the smaller stocks are the ones that are making moves today. So you got to be careful out there when you're getting stocks like this to move. But we're still seeing some of these pennies make a lift. All right, here's one for Julio. We got CEI. CEI at 0.6. And if you see a stock at 0.6, doesn't seem like it's coming back anytime soon. Let's just be honest. All right, Disney, that's not a bad one, but making new lows there. You got to go when you're making new lows. Looks like you're coming back towards those November lows. Can we break those? As it's not looking good here. Low there, 87.60. And we got 86.28. See if we start cracking through there. Of course, we saw how the bad news was impacting Netflix to the downside. I thought that can continue weighing on Disney. You could look at Netflix getting a little bit of a bounce back actually today. That's the interesting part. But Disney not partaking in any of that bounce back. And if anything, this little wick that we got right out the gates where we went to 298.79, if anything, that looks like a trick to me. We'll just have to wait and see how we close. All right, let's keep going. We'll take a look at some different financial area. I know that someone out there likes some banks, so we won't get too much into it, but we can take a look at it by industry, right? So a lot of times I take a look at industry charts because I want to keep watch, right? Like what's going on here. So if you take a look, regional banks, slowly but surely giving up a big push that it had, right? In 22, we started coming back up, and now as of late, going back down quickly. Global banks, also same thing. Run, starting to fall. Just be careful out there as you're starting to see a lot of pullback. MS falls into capital markets, right? Morgan Stanley, you're seeing a big pullback there. Goldman Sachs, same thing. Capital markets, starting to see a pullback. See the theme there? It looks like we're getting some pullback after the run. All right, interview is coming up at 1:45. Stick around, team. We'll get into that interview just up next. All right, we'll take a look here at some stocks. I will let you guys know I'm still in SARK for my swing. If you guys know, I talked about this yesterday. Got in at 63.24. Looking for a nice little push back up, right? Well, we'll see if we can keep pushing in SARK. Of course, this is inverse to Kathy's ARKK. We talked about this one yesterday. Would it cut through the support? And there you see it this morning, 33.92. Would we cut through that level? Well, this morning we cut through that and holding it as resistance now. So I'd be looking to see if we can get back towards 34. And if not, watch out on those ARKK names as they could be coming down fast. Why do I think that ARKK is not down even more? A lot of it is that EXAS. Of course, the reason why this stock was moving is because of what happened to GH, a rival health company. And so the rival announced that their test was less accurate, and it actually ended up pushing right here Exact Sciences up. And that's actually holding Kathy from just going right through the low in my eyes, because this is a 19.57% move, while a lot of the stocks are down big, right? So you got SQ down 7%. Not looking good there in Square. If it's not looking good in Square, I wouldn't expect it to look good in PayPal. Fate coming down. Coin coming down fast today. Tesla continuing to drop. I talked about this morning on pre-market prep. What was the level that I gave for Tesla? Rejection of 160. Look for it. It happened yesterday. Went right to the key, 159.99. Look what happens today. 15-minute, couple wicks through that, but never closes above the 159.99. And you get the smackdown right back down to the downside on Tesla. That's just how it goes sometimes. A lot of times what we're doing is we're making these little moves in kind of the hourly charts and not the intraday charts, not the 1 minute. The 1 minute in this environment has not been something that I want to take part of. And if you are kind of more in that 1 minute style trading, well, it's also made sense to take quick profits, right? It hasn't been like just keep everything running, because even in a Tesla, had a good day yesterday, was looking good towards the pre-market, making a nice move, just catches you on that bull trap and you're right back down. All right, catching up the spam there, kicking that out there. We'll keep going here. According to Fromhertz today, quad witching, they rebalance by selling winners and buying losers. Yeah, could see that happening. Definitely, Jay. And then we could see the losers get a little bit of a run on Monday. There's nothing wrong with that, but definitely the SPY coming down fast. That's not good outlook though, right? If the SPY is going to come down towards the 381s that quickly, when we were just at 400, higher than 400 just a couple days ago on Wednesday. We were all the way up there to 406, 414 with the CPI. Well, boom, knockdown, team. Just to put it in perspective, right? From the high, from where we're at now, we're talking about almost a 7% down move in the SPY. That's a big move for the SPY. And what could tell us this? Well, one thing that I think a lot of people get twisted is the VIX. The VIX is a lot of times measured implied volatility. A lot of times some people are even using like moving cross averages on the VIX. That's not what it's intended to do. I think a lot of the times it's just intended to just keep it simple, right? It's a volatility contract, right? It's to measure the expected move in the SPY or the S&P 500 in the next 30 days. If we have, let's say, it up towards like 17, well, then we can go ahead and expect like a 6%, 7% move, right? These are the things that you want to be looking at. I actually put out a chart about this on my Twitter. So if you guys follow me at Money Mitch BZ, you will get some insights that I pull from the CMT, of course, implied volatility, the VIX, where it's at, and what could happen to the S&P 500. One thing that we clearly could see, right, is that volatility is increasing now. And as volatility increases in the SPY, we've seen the market come down, right? And so one thing that I always look at is the ATR. And I think it's an important thing to look at as we're seeing when we're at the top, very low volatility. And when we're at the going on the downward turns, we're seeing increases of that volatility. And a lot of times it peaks. And that's usually when the market turns around a little bit. Now look at this upturn in the volatility. Big push there. As we were going sideways near the top, that's always going to give you a big increase there on the downturn. And now the question only is, can it get back above towards that ATR where we were trading up there 10 points a day almost? Well, keep watch to see if the range can get up there. Of course, that's the average true range. All right, in a second, we'll be getting into our interview. We should be getting Josh Saylor. He'll be joining us in just a second, the partner and co-founder of Blue Zone Wealth Advisors, talking about the overall market. So if you guys got a question on the overall market, throw it up in the chat and we can get to it. Someone wants to take a look at a stock, and that's what I'm here for, my friend. No worries. We'll take a look before we get towards our interview. STNE, Stone Company. Actually, I've seen this like a building for this company. I don't know why that's coming up, but I've seen Stone Company before. Home modifications. I did see kind of an article that was out. I'm not sure if it was Wall Street Journal. I believe it was. Don't quote me on that, but look it up. There was an article about house flipping and how house flippers are definitely struggling in this environment. A lot of that is they're stating that, kind of with the inflation going higher, it's costing more to do those remodeling of these houses, which could be playing into the story of why Stone is starting to come down. Another thing is it's been in this kind of long pattern, right? Well, a lot of the times, if we can't get through resistance, we come back and we test support. Support in this case being an uptrending, right? This uptrending trend line. And now we start looking, are we just going to start taking out the lows, the supports? Well, there was clearly a support here at 895. That doesn't look like it's holding. From there, you can start looking at the next levels. Where are we going to hold to? Well, you can do 823. It might even go down there towards 763. Eventually, going down there to 7. We'll see what happens to this one. Doesn't look good. One thing that I would say about this one is look for deeper time frames to actually show you a change in trend. What does this show us? A big kind of monthly bear flag. And that's not what I want to see on the monthlies. I want the monthlies to show me if this was up here towards 14 with a big bullish engulfing candle, then that would look good. But what is this, team? This is a bearish engulfing candle, not what you want to be seeing on the monthlies. It actually shows you that the trend could be speeding up and that a new decline could be coming in as you've been kind of holding in this pattern and starting to break down on the downside there. All right, we'll see what else is going on. Low VIX, complacent. Well, yeah, the VIX, I'm telling you, I don't think there's much edge there. I think too many people focus on the VIX and maybe don't understand it, and that might be why there's no edge there. But I'm not going to get into all that. I just have seen it. I haven't really found an edge with the VIX. Overall, it just doesn't seem to make sense a lot of the time. All right, poor Kathy says, Chris, well, yeah, I mean, you choose your own investments, right? We all choose our own investments, whether we're going to get stuck with the bag or not. That's what you always got to figure out, right? All right, well, it looks like it's 149. Looks like we're having a couple issues here. Just give me one quick second, team. I'm going to go ahead and play a trailer, and I'll be right back with you guys.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, team. I got some bad news. Unfortunately, it looks like Josh is going to have to cancel on us today. So, of course, I'm sure he didn't do it on purpose. He just had an emergency cancellation there for us. All we can do is just keep moving forward. We'll take a look at the stock market and see what's moving out there. If you guys got a ticker, throw it up. We'll go ahead and cover it. If not, we'll wrap up the day and see you guys at the close. It's a tough environment out there. We'll see. Right? I'm still in the Sark action. Am I sarking Kathy? Yeah, I'm sarking Kathy. But look how the monthly chart. We just talked about a bearish engulfing pattern, right? Well, look at the Sark monthly chart. This starts looking to me bullish. I moved myself backwards into the weekly. Now look at this, right? Well, this line doesn't really line up for me on the weekly, so I'm going to adjust it. I'm going to make it more adjusted towards the weekly trend lines, right? And so you can see here how we've gone up multiple times, but kind of failed. So let's go back towards the daily. Let's see where this actually lines up, right? So now you want to do it to the top of that price point, and you want to go into this action and kind of draw it towards that trend line, right? You want multiple touches. Touch there, touch there, touch there. Now that we're getting above it, one of the things that I always look for, and when you see this type of action above a trend line, we're looking at what's called a throwback. So that's a move above the trend line, pulling back towards that trend line, and then taking off. A lot of people call this the pullback move. But the truth is, in technicals, the way it's written down, this is called the throwback move. This is what the CMT associations taught me. And one thing that I would look at now is, so you get that kind of push up, right? A lot of the times you're going to get a pull back test type of action and then get the next lift up. Be careful, team, because it could always kind of stair step here before it really gets moving. A lot of the times we're also looking for volume. An expansion of the ATR while we're getting that up move would be a good level, because we could see expansion towards the up move, showing you that volatility to the up move. And now that we start breaking out, we can move even closer in time frames, right? We can go to the 4 hour, maybe start working there. You can see here how we went up. We tried to pull back. We still haven't really tested the line there. Let's go to the hourly. Hourly starts looking a little bit even cleaner, right? Above the trend, hold the trend, pull back, push above. As long as we hold above that trend now we're not looking too bad. We'll see if we can hold this trend and actually push to the next level and hold the throwbacks back towards at least 62. You can give it a little bit of room because it can wick down here and recover. We'll see what happens there in SARK. I'm taking my swing from 63.24 and holding to 62. So that's going to be my out. If 62 really breaks, well, I'm going to get out of the trade. That's the filling of this gap. We'll see what happens there on the SARK action. All right, catching up with the chat. What's up out there? Kenneth, Julie, what's up out there? 68% of options are now bearish. And when they flip the market, and that's when they flip the market back towards the upside. Well, it could be true. It could be true that you could get a little upside move. The only thing is, I think we're starting to focus on the headwinds. So if you can see us getting around those headwinds, let me know why. That's what it's all about in the chat. You guys can also talk. All right. What else is being out there? Disney has a planned community open up in Palm Springs. We'll see how that kind of moves. Pay attention. This is Certified Mitch with many hours of study. Hey, at the end of the day, I'll tell you one thing. I've definitely put in my time. And like always, I'm always here to try to help people understand kind of the things that I understand, right? And if you don't understand something, always question it. Let me know why. And maybe it's the terminology, and that we all learn, right? That's what we're here for. That's what I'm here. We're all growing together to up our skills and understanding in the market. All right, the QQQ. Let's take a quick look at this because it also has a trend line. Very similar story like the SPY, right? So long-term trend lines. We want to make sure that we're paying attention to these. When do they break out, right? Well, you can see here, we made a nice little move back towards the 300s, and now we're coming right back down. So now we need to see where are the important levels to watch, right? Well, I would definitely give this level around here, this level around here, the 262.76. What's the low here? 263. So we're going to use 263 to round it here. A lot of times support is never going to be always just perfectly done, right? What I mean by perfectly done is that sometimes it's going to give you a range. That's why sometimes I'll make the thickness on the line a little bit bigger. Show me where it really gets dangerous to cut through. Then I want to be paying attention to stocks if we do cut through those lows, right? So I'm going to use these body lows and look to that we really need to kind of cut that candle on November 9th. And now the next low should be the extreme low on the chart. That's where we're looking for. If we cut down 255, you got to be careful because then you're looking back towards pre-pandemic numbers, maybe towards a 236 for the QQQ. And if the QQQ looks this toppy, what type of stocks are going to come down? Well, it's going to be type of stocks like NVIDIA. NVIDIA is one of the ones that I was looking today to keep coming down, and it did it. It did even a little bit of a bull trap, coming back towards the prior resistance, rejecting that move, and then going right back down. That's why I like to use a lot of hourly charts. You'll get those breakdowns, and you'll look for the resistance touch. You can see how you went right back towards this resistance right here, that 171.50 area, and you used it as resistance today. You go to 171.52, boom, right back down there in NVIDIA. We'll look to see if this one keeps falling off the tape. Micron falls in the same wagon. AMD falls in that same wagon. Look for these to kind of lead on the downside. So if you're a day trader, maybe you're looking at like a SOX type of trade. Well, this has been doing well today, and there's a reason why, because we're starting to see that turnaround in the Qs. So a lot of people start putting some daily bets to the downside. as you're seeing success continue the trend. Appreciate the love, Ballo. Got you, man. Hope you appreciated my talk on the QQQs and the outlook with that. Did you mention Netflix? I'm looking for a breakdown towards 286. I got you, Garrett. Definitely, if you guys enjoyed me going through these stocks and telling it how I see it, hit the thumbs up. Show me that you guys appreciate it, like always. Let's get to Netflix. I think we've taken a quick look on Netflix, but I'll go ahead and I'll jump into it. I think this is kind of a little bit of a bull trap. I talked about this earlier. You can rewind the show, little fact check me. But yeah, I can see this being a bearish move. I can see it being a fake out towards that 300, and all of a sudden you cut right back down there towards the lows. You're looking for a move back towards 287. So you're seeing 286. Of course, I can't tell you what to do. The only thing I can tell you is what I see, and I don't see it looking too bad if that's what you're looking for. A 286 breakdown, at least from what I see a rejection of the pattern going back, and you can do that also with the hourly. Hourly is going to help us all the time. This is why I love the hourly charts. Too many people, I feel, avoid the hourly charts. And why do they avoid the hourly charts? Because they're stuck probably in the 5-minute or the 10-minute time frame, and they don't see a lot of the times the action back towards the upside and rejections, right? So if you drew this as a support right here, it was a support. Look for it to be coming kind of like the resistance, right? You can see here, we can't really get back above the 292 area. So if we start rejecting that, that could easily start becoming the resistance. And you can see how we've tried to get up here multiple times. Of course, we could scoop back towards 294. But if we start breaking down through the 290s, watch out. You could be coming right back down towards those pre-market lows. And yesterday's lows will be the first thing that you run into. That's going to be around levels towards this low that I'd look here. And that's towards 286.68. And once you cut through that, you'll look for those pre-market lows to cut through. All right, that's going to do it for me. Can we do your birthday celebration on Monday since your birthday is on Sunday, Kenneth? We could do it on Tuesday. I'll be back on Tuesday. I'm actually going to take Monday off, Kenneth. So just want to let you guys know stock market movers will be down on Monday. A lot of that is what? I'm just going to have a good birthday, go out, maybe have myself a bourbon on Sunday night. Don't want to be showing up on Monday. Want to be full back to service for you guys on Tuesday. Hope that you guys enjoy it. I'm going to take a little day on Monday, and then we'll be back for you guys on Tuesday. Bring you guys another great show like always. And I got a special surprise for you guys next week. Don't want you guys to miss it. I'll have an outlook. I'm starting to really dig into 2023. This is what you guys out there, I recommend you looking into. What are you doing in the next year? How are you upping your skills? Are you changing your strategy? Have you reviewed your year? Have you looked at your data? What kind of themes are you looking for? Well, stay tuned, team, because next week, that's the focus. We're kicking out the door 22. Forget 22. Let's look into 23. Adam Johnson is going to go ahead and join us on Tuesday. Looking forward to giving you guys the interview that I did from Central Park. Yes, you said it. I said it again, guys. Central Park. Don't miss that. New York. I was there with Adam Johnson. I'm going to give you guys that interview. And then we'll also get an update from Adam Johnson coming up, how he's looking towards 23. What has changed since that interview? It's always important also to kind of track where your mentality is going and what changes. This is why I recommend you traders out there that actually keep following with the overall market and want to go ahead and have all that understanding the macro environment, right? We'll write down weekly, monthly. How do you see the views, right? How do you see the market? What's the focus? Is it inflation? Is it recession? And this helps you as you slowly move along. You'll start seeing how the trends are moving, and you can be ahead, which is what I think we're all trying to do, right? At the end of the day, we're trying to put some bets forward into what can happen. And a lot of that is following the mentality. What themes will come into play in 23 is going to be very important. How you should look at those stocks. Adam talks about it in this interview as I ask him the question of how he chooses high quality stocks. Come out, check this tomorrow, check this on Tuesday, and don't miss it, team. It'll be at 10:45. Sorry, guys. It'll be at 12:45 p.m. Eastern, right? after Benzinga Live into Stock Market Movers. So don't miss that. I'll definitely put out some posts on Benzinga so you guys are aware. I just wanted to give it to you guys first. All the audience that tunes in to catch me right here, Stock Market Movers. I hope I'll see you guys on At the Close, 3:30. Joel Elconin, don't miss it. We'll review all the action, get you ready for next week, and of course, maybe give myself a little birthday wish. So Kenneth, you want to come join me? You want to do a little birthday celebration? Come out to At the Close. We'll do it there. 3:30. Don't miss it, team. I'll see you there. Appreciate the love, chat. I'll see you next time.